all demand in this area. So when we know that there's all demand in that area, and if we know that that's the case, and we know that this area is teeming with supply, we can obviously mark those areas in terms of brackets. Now, if I want to get heavy short, the best place for me to get heavy short is into that demand, of course. So selling at lower prices doesn't necessarily always result in a buy trade opportunity. On the contrary, selling at lower prices, many occasions will be sellers who failed to get the kind of liquidity at the top edge, and that's what you look for. This seller here may have been a buyer off of this bracket. The answer was we don't know what exactly it is they're doing here, but that seller in that location doesn't have to be a buy trade. It doesn't have to be a seller that oversold into a terrible, terrible location. It might be a seller that was watching this bottom edge here. You can see the big sell order there. There might have been a seller sitting just above the top edge here wanting to get accumulated into that short bit of business up here. And it never happened. So they were left watching. When it didn't happen, they may well have decided, okay, if I'm going to be short the dollar, I'm going to have to sell across a spread into that demand, which is obviously at lower prices. Once you sell into that demand at lower prices, you get this beautiful sell-off until we reach into this lowest low price. As we head into the break of the 60 level, you can see the price sticks, and you start watching these for profit-taking blocks. Profit-taking blocks that you can lean on for buy trades should be pretty obvious. We go back to our old-fashioned storyline of once, twice, three times. So, for example, if I see this big block coming in and the price sells off, we should be aware that profit-taking blocks occur usually in blocks of three. Why blocks of three? It just makes sense as you distribute price, right? So there's the block 1, block 2, and then block 3. So you can always understand that profit-taking blocks on the way out of here usually look like this. Once you can count 3 profit-taking blocks, you've normally got a bottom edge or a top edge. So if you know that these are profit-taking blocks and who's going to be a seller at that price, unlikely, isn't it? We can see that from the price action. So there's a profit-taking block here, pushes the price, profit-taking block here, pushes the price, and a profit-taking block here. Now you can pretty much guarantee that if you see 3 profit-taking blocks, the next response will be pretty solidly, positively, very nicely bullish. And you start watching for that profit-taking block, because normally what you're going to see is something perhaps that maybe develops like that. And you start seeing that opportunity to take advantage. In terms of profit-taking blocks, you can see that this has had no buy-side response, so that's not a profit-taking block. You can see this one hasn't really had a buy-side response. So they're definitely not bidding for it in terms of market buyers, but this has enough distance that is almost guaranteed to be a profit-taking block. So that's possibly 1, possibly 2 at this stage. And if we get another block trade on the dollar index, it'll probably be the end of the down move, at least short term, because depending upon our count, it'll probably be the end of the move in the short term, and we can start watching for the dollar index making a bottom. We've just got to keep fresh on the charts. We've got to keep an eye on the other markets that are developing in the background, so that we can always recommend what's going, what's not going. Very important that we don't lose sight of these elements. If we are going to be seeing those profit-taking blocks, we would start to recognize some activities. We talked about activity before. We talked about this idea of watching for activity in certain areas. You can see sterling has a fairly sizable chunky activity at the top front here. So we can see where that profit taking was coming from. It was sterling buyers selling, sterling buyers closing out their position, selling sterling, buying dollars. So you can see that could well have been the reason for that dollar index block coming in, was a sterling long closing out. So that's the start. And obviously if we start seeing, one would imagine, of course, if we start seeing some weakness on the ABCs, if we start seeing something developing like this, then of course we're going to start seeing that dollar block resulting in a very, very sizable top edge up here for euro dollar sellers, which is the bottom edge on the dollar index for a possible dollar index buyer as well. So looks interesting. Could well be the trade of the afternoon as the dollar long trade as we move into the last half of the trading day, and that might be something we can watch after the classroom for trading.